Hey guys, I'm not sure what happened with last night's audio, so I'm recording this for you guys. Yesterday was a little bit of a tough day to trade again. We had this really nice move up here in the morning. We had about a, let's see, about a $3 move up, and then we just kind of chopped in about a $75 range, or five, sorry, 75 cent range for almost 3 hours right here before that big end of day push up. So a couple things to think about going into next week. Next week is CPI. As of right now, my numbers say expectation is that we're going to get a 5 to 5.1% year over year CPI and a 0.4 to 0.6% month over month CPI. That is a hot reading. If that holds true and we get a rebound or even just an unchanged year over year CPI with that month over month coming in hot like that, that could finally be what we need to take this market down. As of right now, basically what we're seeing is we're having little spurts of reaction to negative data, negative news, events, but then almost within basically 4 days, the markets have digested that news and it's all over. They just don't care anymore. So right now, it's pretty much 100% chance expectation of a pause in the June FOMC meeting and that there'll be 75 basis points of cuts by the end of year. If we get the hot CPI next week, that will change. That will bring in most likely the expectation of a 25 basis point rate hike at June. And I would be very surprised to see markets not go into a panic and start pricing in that there'd be no rate cuts by end of year. If we get that, we're going to get that June level type of meltdown where markets just straight up overreact. Or I would even say overreact, but finally react and dump very, very aggressively. However, if we do not get a hot CPI on Wednesday, which means if year over year does not come in unchanged or minimally, hopefully, rebound, honestly, I don't see a reason why this isn't going to just continue to slow burn up to like the 430, 440 range. There's just nothing at this point that really is spooking the markets outside of like an actual full-on financial collapse. So this week we came down, we did hold this previous 404.3 demand, and we established a new demand here at 405.2. With this, we are bouncing back up, and this should be our target area, this 415.6 to 416.84 supplies. So really, if you look at it realistically, since about March 31st, we have just been trading in this consolidation zone. Usually, as you see back here, when we have these consolidation zones, generally that means a bigger move is coming. Whether down or up is unpredictable, but a bigger move in direction is coming. We are still in the rising wedge. We just seem to be barely putting in a new lower support in every single time before we bounce. So expectation is that we're going to push up on Monday to this probably 416, 417 area. Maybe try to establish a new supply on Tuesday if we get a little bit of a doji, kind of like this. Basically, this market has been doing these 2-day rallies followed by a doji. You can see a couple examples of them. There's another one right here. There's a few back here too where we just have these 2-day rallies. So when we do that, generally this third day, the third day is a doji, and then the fourth day is a big retrace. So what that leads me to believe is that Monday will be another green day where we push up. I mean, honestly, we're setting up pretty close to, where's it at? These kind of sort of situations here where we're just going to push up. And then Tuesday, the day before CPI, will probably be a doji much like this, maybe a little bit higher to establish a new higher supply. And then Wednesday, if we get that hot CPI, that's going to start the leg down with my expectations that we're going to be somewhere in this 380 to 390 range. Now go over into a weekly time frame here. You can see just how tight of the closures we have had for the last 5 weeks now. And 7 out of the last 8 weekly candles have closed as dojis. Right now, we basically have these back-to-back hanging man candles, which generally does infer that the top is being put in. However, the one hard thing is here, is that we are seeing these massive wicks to the downside. And a lot of times when there's really long, you kind of see back here, wicks to the downside, that usually means the upside is actually more favorable. Basically, if you think about a wick, this is basically a test of price action. So the market was testing to see if it wanted to stay down here, but most of the price action happened up here, which favors the upside to be tested next. Going over the futures, same thing here in the daily. We're kind of holding this really nice 4150 resistance. This is pretty much the midline of the last about month and a little bit more of trading that has been happening since we popped over here. 4073 is now our new demand or support, which pushes us back towards this 4191 to 4199 range. Same thing, we did not come down still to 4040, 4053 area. We still have these supplies down here to take out. SPY still has this 399 supply that needs to be taken out also. Futures time frame here, so same thing. We have so many doji candles for the last 8 weeks now. This one is interesting because it actually put in a double top, and now we could put in a double bottom and push back up, or we're going to just finally see it come down. So this is really interesting to have these two candle bodies exactly perfect with these long wicks. So I will be interested to see where markets push us next week. One other thing to keep in mind is we're 2 weeks away from 7 weeks post JPM collar. Why does that matter? Well, generally speaking, the 7 weeks after the quarterly option expiration, which is when JPM rolls their collar, generally speaking, we pick a trend, and then you'll see us for about 4 weeks, which is week 7 to 11, inverse that trend. So far, our trend has been a very slow burn up. So we're getting to the point where it's time to inverse that trend. So if we do somehow end up higher next week, I would be pretty favorable to be starting to look for some downside for the next 4 weeks after that. Going over to the VIX here. So the VIX did have this pretty big pop the last 3 days. However, it just gave it all back up and then some. We're still holding this really nice 17.1 area here, but realistically, we're kind of just back in this consolidation area here. So one thing to keep in mind as we go into CPI on Wednesday, you have to think, where is the risk? So right now, the VIX is at 17.1. If you look back at the 2022 bear market, I'm going to zoom out here. This just starts 2022 right here. Look at where all the price action is happening. Most of the price action is in this green channel, which is why I have it highlighted in green, because this is where a majority of the price action and the VIX is happening. Very rarely in this red channel is there any price action. When the VIX gets into this red channel, the risk comes to the downside on SPY and the upside on the VIX. Now, if you think about it, if we're going into CPI and the VIX is already in the risk on downside channel, you really can't go much lower. Even if CPI were to come in good, the expectations of a big VIX dump, which leads to a massive rally like we saw back in November, is very, very low. The chances are higher of a miss, which then takes us much, much lower on SPY, and the VIX pumps back up. I mean, even think about it, like looking up, we're going to go all the way back to 2020 right here. Majority of the price action, even in 2021, where did it happen? It happened in, you could really say the 16.3 to really 19.5 range. Even back to 2020, there was times where we were in this 12 to really 15 range, but this was before anything bad happened. But even then, we had big spikes to the upside. My point is here is that below 15.09, since really the 2020 COVID crash, the VIX has not been below that. It is wicked, but it has found support there. I'd be very surprised to see the VIX make a move down to that range based on CPI. I know a lot of people want to believe that the market is healed, there's nothing bad, all that stuff. There's just too much going on still. We have not even gotten the actual pause yet on FOMOC. And J-Powell really hasn't even confirmed that a pause is coming next meeting. We haven't got our pivot. We haven't got rate cuts yet. We haven't got any of that stuff. We haven't determined if we're actually in a recession or going to be in a recession. There's just so much going on that is not ready, not been come to fruition yet. So it'll be interesting to see what happens on Wednesday. I'm going to be personally looking for a big push up on the VIX and a big drop on SPY, but we shall see what the market brings. Hope you guys had a good week trading this week. This was actually my most profitable trading week this week. I'm looking to keep up that same energy next week, but I will see you guys then.